All right, good morning, everyone. Futures Barizio here. It is Tuesday, June 17th, 2025, 11:15 a.m. Hope everybody had a great weekend. And just dropping kind of a late morning, midday update here. And just throw something else out there for those of you that maybe just want to do some swing trading, don't really have time to be parked in front of charts, day trading, or just don't want to deal with that stress of again staring at charts a lot during the day and worrying about just the intraday volatility that you get in any of these markets. Really doesn't matter, they're all the same in that respect. So we'll talk about just what's on the charts and incorporate that into, again, a simple kind of trading strategy that you could look at. Um, and there's no magic. And I've probably talked about both of these in some respect before. So let's just jump right in. Again, as we get started, make sure you smash the like button, subscribe to the channel, and any questions or comments, drop them down below. So let me go over to my MT5 account first. We'll start here. You see I've already got some drawings on here. Okay, so there's the two main things that are across all these charts are this. These are Heiken Ashi candles, and you don't have to use Heiken Ashi. You can use regular candlesticks. Just understand, especially in the futures market, depending on the contract month you're using and the date, you could have a lot of like spotty gaps on the chart. Now it won't be as bad on a 4-hour chart as it would be on a short time frame. So again, you don't have to use Heiken Ashi. You can use regular candlesticks or whatever you want. Okay, I'm using candlesticks because it helps smooth out a little bit of the price action. And again, I've said this before. It's not that I don't ever look at regular candlesticks. I can easily just turn on my candlesticks here. I need to change the color though, because I made the Heiken Ashi ones pretty much the same, but you can see the difference on the chart. I can see the underlying candlesticks. And it's important to see the underlying candlesticks because Heiken Ashi candles, again, do not show you the actual close or open. Okay, it takes an average. That's what Heiken Ashi means. It takes an average of the last couple of candles, and that's why it's able to smooth things out. But because of that, it has a little bit of a lag, and you're not going to see, again, the true open or close on a candlestick. And the wicks on Heiken Ashi candles don't necessarily mean wick like it would on a regular candlestick. It can, but it doesn't necessarily have to. So again, use whatever you want. Again, even though I generally plot Heiken Ashi candles, I will definitely switch over to candlesticks, and especially when I'm setting take profits and stop loss areas in particular, and especially if price is approaching, say, my a take profit area, let's say, and maybe there's going to be a really strong rejection before it gets there. I may not see that on the Heiken Ashi candle until it's already pulled way back, and I end up leaving some money on the table. So I'll switch over to the actual candlesticks, make a judgment call if I want to manually close the trade before it actually hits the TP. And so, like I said, at key levels, whether it's your own stop loss or take profit, or at major support or resistance areas, that's where I think Heiken Ashis have a little bit of a drawback. But in the course of just analyzing general trend and price direction, I think they're great. So, but anyways, it's not a video on Heiken Ashi. The other two things, and again, you don't need to use both. I just like the short and the longer one because when they do align, it's more powerful. So this is the CCI indicator. It's a very common, it's an old indicator. It's an oscillator. But, and again, all indicators lag like these oscillators, but the CCI is pretty good. It's not overly reactive, but it's not pitifully slow either. And obviously you can change the input levels to make it more reactive or slower. So I have an 8 period, that's this yellowish color, and then the 21 period in the blue. It defaults to 14. If you just put it on your chart, most trading platforms are going to have it defaulted to a 14. If you want to just simplify things, just leave it at the default 14. That's a good in between 8 and 21, and I think that would be fine. I just like to use 2. it's not overly, even though it's the same indicator, it's just a different time period. And I just use it just for a little extra confirmation. Obviously, the 8 is going to be a little more reactive than the 21 just because of the period, but the 21 smooths things out a little bit. And it's not really that much difference in terms of how it reacts. All right, so basically, this is a trend following system. So we'll just start with this. Oh, the other thing on the CCI is I took off the upper and lower. Normally, a CCI indicator would have a plus 100 and a minus 100 upper and lower level bands because this is a fixed indicator. It oscillates between 100 and minus 100. And so I took those off because I don't care about that. People use those for like overbought, oversold areas. I don't use that. I'm only interested in the zero line. So basically in zero line crossovers for trend continuations. And so we'll show you that. So this is natural gas, and so again, and these are all 4-hour charts. Again, this is like really a swing trading type of strategy. Okay, and you can probably use this on a shorter time frame if you wanted to use this for day trading on an hourly chart or short. You probably can, but again, you're going to have more noise and more false signals, especially using the indicator. So again, this is really intended for kind of swing traders, people that don't have a lot of time, and you only want to be able to have to look at your charts, basically a couple of times a day, and just to see what the price is doing. And it's a 4-hour chart, so it's still, short enough where, you're going to get some opportunities within the trends. But because it's a 4-hour chart, you're only going to see the pullbacks in that trend for you to re-enter that are meaningful. So small little fluctuations and pullbacks within, say, this uptrend we're seeing now in natural gas, you're not going to see on a 4-hour chart. That's why I said you can go to a shorter time frame, maybe to a 1 hour or 15-minute, and you will see those small pullbacks, and you can trade. And the CCI will show you those too. But you're going to have a lot more entry signals, and they might not all be valid. So this is a lot slower. And understanding you may go days without a trade on a particular asset, or even if it's trending. So you have to be ready to react when you do get a signal on this time frame, because you're not going to get a lot of them, and you just have to trust the system. Okay, so, and the other thing I wanted to mention is the things like these trend lines and these indicators are not the primary thing I look at. The primary thing I look at is still market structure. Okay, breaking of swing highs, swing lows, and continuations, or breaking for reversals. Whether you want to call it, change of characters or break of structures, whatever. If you're, following, quote unquote smart money concepts, but the structure levels to me are still the most important things. The indicators and the trend line drawings are all just things to help you with timing and confirmation, but it is not what you should be taking your cues from. Okay, these are just for timing purposes. All right, very important. If you trade every break of a zero line on a CCI indicator, you are going to get killed. So. Because a lot of them will be false signals. So you have to be selective with it, follow it in the course of the trend. All right, so on natural gas, so looked like we were trending down. I kind of labeled this right here as a swing high. Obviously, it lines with the trend line, but that's just how I drew it. It's nothing magical about the trend line. But we had this swing. Price did try to go down. In this case, we really did not make a new low here. Came down to the previous lows. You can see the horizontal. So that's already an indicator right there to me, if I was watching this, that maybe price is the sellers are running out of steam. And then what has happened since then is price has broken through the trend line. Which again, that is not the most important thing. But the more important thing is that we have broken this swing high here previously. Okay, broke through the trend line, because a lot of times, what will happen with a trend line break is people will see a trend line break, like, let's say this candle here broke and we're like, oh, we have a trend line break. They go long, and then all that turned out to be was a swing, and then price tanks again and they get stopped out because it wasn't, there's nothing magical about a trend line break. Okay. But in this case, it looks like we have broken structure. Now, again, there's no guarantees. But again, I've drawn now an upsloping trend line to suggest to me, anyways, that perhaps we're going to turn more bullish. So for now, what I'm going to do while we're talking here, I'm going to delete this downsloping trend line just to clean the chart up. So now basically what I'd be looking for is very simple. Again, nothing to do with this upsloping trend line. This is just to show you an uptrend. I can easily just take this. Well, I'll leave it. But you could easily just take that off the chart. But basically what I'm looking for now for an opportunity is for the CCI indicator for price to pull back and pull back enough so that the CCI, both of these, drop below the zero line. Okay. And then, I'll wait for basically a bullish Heiken Ashi candle to form at the same time and close. And at the same time, the CCI indicators to cross back above their zero lines. And that would suggest a continuation of the uptrend. Now, again, the 8 period one is going to cross above and below faster than the 21, but it's not that much delayed. And so you don't have to necessarily wait for the 21, but I would suggest you do. Again, if you don't want to use both, then put one indicator and go with the 14 period and just be done with it. Okay. If you don't want to have two, I like having both, but you don't have to. Like I said, you want to just use one. I would suggest use the 14. Again, if 21 plus 8 is 20 and call it 30. Divide that by 2 is 15. So you use a 14 or 15 period CCI. There you go. Okay. All right. So that's really all I'm looking for. There's nothing to do in this asset for me right now on this particular time frame. All right. On to corn. This is a little bit opposite. We're still trending down here. Now we are potentially having a little trouble going lower here. Okay, so I'm not saying this won't go lower, but you can see price came down to this previous low kind of in here and rejected. And again, Heiken Ashi wicks are not quite the same, but when you see a small body, and a long wick, it does suggest price rejection, even though Heiken Ashi candles will always have wicks in the direction of price movement. So that's just how they work. But again, a wick on a Heiken Ashi candle doesn't always mean rejection because they all have wicks. It's really the size of the wick versus the candle body and where it happens. Okay, but let's say that this is just, a pause in the downtrend. Again, this represents market structure, not the trend line. To me, this is market structure. So this is kind of the swing because this was the last swing high that led to at least this attempted low. So if the trend was going to continue, then I would expect to see a pullback here, price to pull back, have the trend line, the CCI indicators cross above the zero line, wait for some bearish price action and a break back below the zero line to take a short position. Okay. Now, whether that happens near the trend line or we get a move back up, whatever, it doesn't matter. Again, that's why the trend line's not the most important, because we certainly could have a break of the trend line and still have a valid downtrend. To me, this is the structure area, and only if price definitively breaks and starts moving higher above this market structure area would I potentially change my bias on this. Okay. So again, bottom line, nothing to do for me with corn. So again, easy peasy. All right. So on to soybeans. And I'm sorry I'm zoomed in so much. It's kind of really too zoomed in. And the reason why is for some reason on MetaTrader, or it's my broker, I don't know. If I zoom out here, you can see back on April, I think this was like mid-April. Yeah, back on April 17th, we had this really huge candle. I don't know what this is about because if I go to my trading view and look at this same contract month, you don't see this. So because of this giant wick here, my MetaTrader platform is trying to accommodate this huge price move. So it's squishing all the price action together beyond that. And the only way I can get around that is to zoom in so that this giant wick is no longer being accounted for in my view, so I have to zoom in and then it goes. But it zoomed in a little too much. But if I go over to trading view, this is the same chart, August contract 4-hour chart. You don't see that giant wick back on April 17th, so I don't know what that was about. This is April 17th right in here, and you don't see it on the chart, so I have no idea why my broker's showing that huge wick, but it's a little annoying. But here's the same chart on TradingView, and I have the same two indicators down below here. I just have them reversed. The 21's on top, the 8's on the bottom. Okay, but the bottom line is the same thing. I'm waiting for a pullback. Wait for price to pull back somewhere. Okay, and then the indicators, both of these CCIs to cross below the zero line. Okay, and then some kind of bullish price action. Okay, the indicator to cross back above the zero line, bullish price action. Whoops, I don't need that one. And you know, that would be a potential long signal. Okay, so kind of the same thing, but nothing to really do now. We are sitting here at a kind of a double top right now, so not surprising that price has slowed down here. It's just a natural view, so you know, we'll see what happens. I got to shut off those Discord notifications. So yeah, I am looking for price to pull back here. Okay, and then you know, we'll see. In terms of market structure, again on the 4-hour chart, this is our structure level. So we do have a long way back to market structure in order to nullify this this downtrend. I know some people may consider this area right here to be a structure area. I really don't, because you know, price really did not make a new high in here. This is where the new high originated from, not like right in here. So I still consider this to be the structure area. But either way, there's nothing to do with this right now, and so we'll just put that aside. Soybean oil is just like soybeans. We finally broke out of a range here on soybean oil on Friday. That was like right in here. This was this past Friday. We see we've rocketed up. We do have divergence, so I'm not a huge divergence trader, but basically divergence you can see in the indicators. In this case, price makes a new high up here, but the indicator does not follow. You can see if I line my crosshair up with that high up at the top of the chart, but look at the CCI down here. So this is divergence. This means the oscillator is not making a new high even though price did. The last time the oscillator hit a new high was actually right here, and all of this it did not. That does not necessarily suggest a reversal, but it does suggest some selling weakness, some buying weakness, especially after a big move up like this, whether it's profit taking or it's just moved too much too fast, whatever. So so I am expecting some kind of pullback, and again, if this uptrend is to continue, then we would see some sort of pullback. Okay, and this arrow does not suggest how deep the pullback will go. I'm just drawing an arrow. And again, the CCI indicators to cross through the zero line and then see some bullish price action, like a bullish Heiken Ashi candle form. And then the zero lines, the CCI is crossing back through their zero lines to the upside. And then that would be a potential re-entry. And you can see, so now we've done 1, 2, 3, 4 markets with nothing to do right now except watch. So this is what I'm telling you about this being slow. All right, so this is the NASDAQ. I haven't really done much with indices, but I figured I'd throw one on there just for a watch. And so, you know, we had a little downtrend going here, and then, you know, looks like maybe we're going to try to move higher here. If this structure area holds, then, you know, potentially this is just a pullback. But I'd like to see a little bit more of a pullback. So again, you can see here on the indicator, I have nothing to trade here. The 8-period CCI did try to break through the zero line. It's trying to come back up, but I don't really consider this valid, especially since the 21 did not. So that would be a very weak pullback anyways. And so, you know, I would, if this uptrend's to continue, I'd like to see it fade back a little bit more, maybe take out this upsloping trend line. The CCIs would then probably cross zero and then wait for some bullish price action. In terms of market structure, in terms of whether, what this is going to do. This is kind of like, see this area as market structure. So if price gets, back through this level here, then we're probably going to move lower. But as long as this area holds, we have this pullback, a break of structure from this downside move up here, then, this is kind of the line. But if price comes and smashes through here, clears all these lows, then we'll probably change direction. Okay. But short term, at least, more bullish on this. Okay, so next, another odd one here. This is 10-year bonds. And so this is the June contract. And same thing here. We've kind of have a down sloping trend line. And you can see I'm in a short on this right now. It's a small position, but we have down sloping trend line. We had this point right here. We had the CCI. I actually drew these arrows last night. That's why they're all kind of offset here. But we had both indicators, the 8 and the 21 today, break back through the zero line. So I took a short. It is in a small profit right now. I probably would trade it probably back at least to these previous lows. You can see, this was the only thing that kind of made me a little hesitant taking this short was because, again, we have equal lows here, which suggests that the sellers kind of ran into a little bit of a brick wall right here. And potentially we could turn and go back up. Okay, so if this structure holds and we move lower, great. If we break through here and we take out this area, which would become a failed swing, then my bias would probably turn more to the upside. And certainly if we get through this area in here, these structure levels would most definitely turn more bullish. But I probably would consider a more bullish stance even if we take out this structure, even though it didn't lead to a new low. Just the fact that it came up here, it looks like really clean structure. So, but if you wanted to be more conservative, you can wait for it to take out the actual previous swing, which would have been basically this right here or this. Either one of these would be okay. All right, so I'm in that short. We'll see what happens with that. And then lastly, another one that I'm in right now, this is copper. And again, you can see we basically have a downtrending position here. We have now this is one where the 21 period CCI is not quite broken. So this was a little bit more of a risk in terms of not really getting that full confirmation. And, basically if this structure level breaks, basically where it hit this trend line right here, and we start to move higher, then that would probably, void my downward bias. So you can see I have my stop loss sitting just at that swing, because if it does get through there, that would basically suggest a reversal. This is the actual structure, even though it didn't hit the trend line, but it doesn't matter. So, and you can see it came through here, tried to poke through there, and then pulled back. So this is the actual swing, because this swing high led to this new low. If this doesn't follow through and we go higher, that's fine. A break of this structure would suggest a move back up. And it may turn out that, the CCI may, if I do get knocked out of this trade, that the 21 period CCI may have been the thing that I should have listened to. But I want to show you all this because the 21 period CCI did not break through this zero line, suggesting that, again, the selling action may be a little bit weak on this. So let's keep an eye on this. Would be a good thing to keep an eye on. All right. So yeah, so that's it, guys. So we went through 1, 2, 3, 7 markets. I have 2 open trades. The other 5, there's nothing to do right now, just watching and waiting for potential entry points or changes in direction. All right. But you can see, guys, a simple kind of swing trading strategy using the 4-hour chart. And again, you can use Heiken Ashi if you want. You can use regular candlesticks if you want, whatever you care to. That's not honestly the most important part of it. And the CCI indicators are just for timing purposes. Again, market structure is still king on all of these, but the CCIs can be used just for timing purposes. And again, if you don't want to use both, just go with one 14 period CCI and that would be okay. All right. I just like having the two variable ones. So like in a case like this, might be a good example of why I use both. Just for a laugh, let's change this one just for a minute to 14. So you can see it's set to 21. Let me change it to 14. And you can see even at 14, if I get rid of this arrow so you can see that even at 14, we still have not broken through this zero line on this asset, okay? So that's what I'm saying. Like if you don't want to use both, then just use a 14 because there's still no signal here. There's still no signal here. Even shortening this from 21 down to 14, it really didn't make much difference, okay? The 8 period is showing a break to the downside, so it's an early signal. But again, it's that's why, because it's a short period. It's looking at only 8 candles back instead of 14. Where when you take 14 candles, it's taking into account more of these previous bullish candles. If we go back 14 candles, yeah, we come back over to here. So it's taking all of these highs that price made in here and calculating that in. So that's why it's pulling it up and not letting it break through the way the 8 period is. Okay, so again, use whichever you like. But I just want to present, like, again, a simple swing trading strategy. For a lot of people, there's so many people on YouTube making, and I've made plenty too, about, trading on 15-minute charts, 1-hour charts, kind of day trading. A lot of people can't do that. You don't have the time. You're not home, sitting in front of price charts, if you have to, go to a job during the day. And so this allows you to just only have to look at the charts a couple of times. And, if you can throw a mobile platform on your phone, if you can't look at it at your job, at least you can keep an eye on you, because you can certainly, you may not be able to get, depending what trading platform, you may not be able to get Heiken Ashi candles on a mobile platform, but you certainly can put the CCI indicator on there, and you can certainly set your chart to 4 hours. All right, so you should be able to still do this even if you can't be in front of the computer, because it doesn't require a lot of time. I mean, the candle, there's only 6 candles a day that paint, and you only really care about the couple that are happening during the daytime hours anyway. So, all right, so I hope that was helpful. If you have any questions or comments, leave them down below. Smash the like button, subscribe to the channel. If there's anything in particular you want to see, happy to do it, but just wanted to present a very mechanical, easy system to follow. Again, guys, don't trade every signal from the CCI. That you'll get killed. Trade it in the direction of the trend. Use your market structure levels to still be kind of the primary thing you're basing your trade decisions on, and just let the indicators just kind of be a timing thing, confirmation thing. Like I said, timing is the most important thing you use these for, but not for necessarily for trade signals. So at least not in isolation. All right, so that's it, guys. Hope you have a great day. Questions, comments, leave them down below. Smash the like button on the way out and subscribe to the channel, and I'll talk to everybody soon.